Hey, it's Nick Hodge here, excited to kick off a new year of market-beating action. And that, of course, means the first issue of the year, the January issue of Foundational Profits, is available. If you haven't been keeping track or you didn't know, last year we were able to generate above 30% returns in our closed portfolio, and that's against an S&P that was down 20% for the year. We're no stranger to beating the market. We've done so 7 out of the past 8 years, and I don't expect this year to be any different, though you do have to pay attention because as this issue lays out, we are not out of the bear market yet. It may be a new year, but it's the same bear market. We still have a recession to work through. We have an inverted yield curve. We have layoffs that are ticking up, and we have a Fed that is still intent on not only raising rates, but also quantitative tightening, taking $95 billion of liquidity away every month and leading to the first ever decline in the rate of change of M2 money supply. This issue gets into what all that means, how much longer we can expect this bear market to last, and of course, most importantly, what to do about it. I call it a mid-cycle macro update, meaning we're about halfway through this bear market and recession, and now the market and investors are looking more toward recession as opposed to inflation like they did in all of 2022. I give a full commodities and precious metals update, everything from copper and lithium to uranium and gold, what's bullish, what we're investing in, and what I would stay away from and why. Then we get into our allocations. This publication is all about what I'm doing with my own capital and my retirement funds, my long-term IRAs, etc. And I go through what I own and in what percentages, from cash to gold stocks to different sectors of the S&P, including staples and industrials and utilities. And by the way, there's 3 new recommendations for 2023 in this issue. We have a recommendation in the defense sector, we have a recommendation in the healthcare sector, and we have a recommendation in the utility sector as bond yields come down, which allows those rate-sensitive industries to outperform, including utilities. And then I do a little bit of market wrap, the things that are worth noting. 2 very important things are volatility. It's been down recently. I'm not so sure that's going to last as these earnings for Q4 come out. I expect there to be more volatility and downside ahead. And then we take a little look at China, which is starting to get bullish after ending COVID lockdowns. So a lot to go through in the January issue. It's a small investment of $199 to become a member for the full year. That gets you 12 monthly issues, access to all the premium reports, and of course a peek at the exact allocations that I'm making in my market-beating portfolio. So I hope you'll join us for a new year. We'd be excited to have you.